What's good, everyone? Today I will be talking about the GU longs I took, catching the low of the week using my entry model, which is the chef's kiss. Right? Before we get into the entry model, this was a trade by the way, but before we get into the entry model is not what's important, right? What's important is the logic and narrative behind this trade, right? So if we take a look at the daily, we can clearly see that the structure and the order flow is bullish. We are rejecting lows and breaking through highs, right? You can clearly see we are rejecting lows and we are breaking through new highs. It's creating new daily highs. And the week opened exactly here. This is Sunday open, and since Sunday open we have not been going anywhere. If you take a look at Monday and Tuesday, normally Tuesday or Wednesday tends to create the low of the week when it comes to classic expansions. This is a classic bullish example. So in example like this, I would prefer the low to be created on Tuesday, or it might be Wednesday, right? You can use the economic calendar to get a better idea on which days we have high news drivers. That will tell us the whole story, which days are going to expand, which days are going to we are going to manipulate, all that, right? But as you can see, this was Monday candle. We could have easily created a Monday range model and maybe Tuesday created the low of the week, but Tuesday was inside range, nothing much, it didn't do much. But the next day, right, this candle is important. This is the CRT that we are going to use. Why this is important? Because there's a key level below it as well, right? That we have this FEG and we have this FEG, right? So we have two FEGs and we have this Monday range candle, and the next candle actually takes the high, right? If I go to the 4 hour, it takes the high. But as soon as it takes the high, it drops, right? As soon as it takes a high, and when it closes like this, we can anticipate that price will at least tap into the 50% of this candle's range, right? Which it did, and then we went low as well. And then on the same daily candle that you can see, it looked like we were about to close above it as well, right? So this Monday range candle, this is just not a random candle, right? This is not a random candle nowhere, but this is an important candle because it was Monday, and it wicked it and we closed above it, right? And now let's go to our entry model. As you can see, this was a daily FEG, right? So our key level is the daily FEG. So we can clearly see that there is a daily FEG in here, but we go to the lower time frames to get a better idea of the key levels that you can see, and more importantly, the lows and the highs, right? That's what's more important than the key level actually. So yeah, we do have the daily FEG, and we have 4 hour FEG as well. We have a 4 hour OB in here as well, which is also important. And the range, you can clearly see a range here, right? The range is this was the low that takes an high. There's a FEG in here. There are lows. This low is an important low as well, not just a random low. This was Sunday's low. So Monday, this is Monday's low, and this is currently the low of the week, right? Monday. So obviously you would want another visit in here and takes this low again for price to go higher, right? I think I've talked about this before as well. This is dumb money. This is where everyone else enters. But when it comes back at the correct time, this is smart money, right? This is where you are supposed to enter on the turtle soup. This is not where you're supposed to enter. Everyone else here, these are early participants. These are where the impatient traders enter, and once they get stopped out, that's when the real move happens, right? and you can see there's a range in here as well. That's why this trade was so important. This range is actually creating buy side and sell side, so it was creating interest in both the sides, right? That's the best trades, the best ranges creates interest in both the sides. So you can clearly see that one, two, maybe a couple of lows here, and there are a couple of highs here as well. Nothing closed above, all wicked, and we go lower. And now I would go to a lower time frame, right? Time frame alignment. We have a 4-hour low in here, so I would go to an hourly time frame to get my chef's kiss, right? So this, a lot of people would enter here. A lot of people would enter here on Wednesday. It was at 6 a.m. as well. Why was this wrong? Because also we need to think about double sweep as well, right? This is your first step and your first sweep. You're supposed to fade this. These were retail enters as well. All these lows, it always taps twice, right? Twice and maybe 3 times. 3 times is even better. So you gotta make sure that you're not entering on this, and you gotta enter on this. So that's why I never entered on this. I always faded it, and now the only thing that I was looking for was a closure below this. A closure below this level would make my life easy, because this is the new low that we create, and a closure below this. Let's see what happens. Closure below this, and as soon as I see this, now I'm ready to take longs, right? We have a good range playing out. We have a key level. We have a daily FVG in here, and we also have a SMT at the lows, right? Every key point throughout the week will have an important high probable SMT, right? Also, I call this trade out as well. Like all of my trades, I call my trades live inside my Discord. If you are going to join, it's the first link in bio. This, as soon as we close below this and we wicked it, right? That was a sweep, and I also had the days as well. Monday, Tuesday, Wednesday. I anticipated that Wednesday is going to create the low of week, right? And then the next candle, all I want is the next candle to sweep that low. As soon as that happens, I'm in, right? And my entry will be below the opening price of this, right? And your stop loss, right? Your invalidation level. That's actually the saucy part, right? That's the important part. That's what a lot of people don't talk about. I don't like to talk about as well, because that's where the actual magic is at. Your proper invalidation level should be this, right? This is a turtle soup inside this key level, a double tap as well. So this should be your proper invalidation level. There's a difference between invalidation and stop loss. My stop loss was not this. My stop loss was this, right? So I would enter here and I would have my stop on this, right? The good thing about this, why this stop loss, right? This is FVG, right? I'm not gonna go in depth into this stop loss, but y'all can reverse engineer and maybe figure it out. I always enter on FVGs, right? And I always have my stop on FVG as well, right? Because some FVGs gets filled, some FVGs don't. That's how you know where to have your stop, right? That's just a brief explanation, right? This is how I normally trade. Almost every trade of mine is the same. So as soon as we wicks this low, I'm in. So if y'all can see, my entry was on this candle, and as soon as I see the next candle taps into this, my trade is break even, right? The third candle, right? Y'all can enter on the second candle, right? Some people struggle with their stop loss. So my advice for y'all, if you're struggling with your stop loss, is don't enter on the second candle, right? Don't enter on the second candle and wait till the next candle to open up. So this was 12 a.m. 12 p.m. and this was 1 p.m. So as soon as 1 p.m. opens, you can enter either on a PDA rate app, right? Because third candle is supposed to instantly tap into a key level and then go, right? It could be a model 1, which is a breaker, which is a OB or FEG, or it could be a breaker, it could be IFEG, it could be anything, right? Or what I like to do is wait for a breaker to get made on the third candle, right? So let's say a break or a mitigation, whatever it is, something like this. So as soon as I see this on the third candle, sometimes I enter on this. That's why I have my entry is not the best, but it doesn't matter whether my entry is the best or not, but because this is more high probability, right? The chance of this losing is super rare, especially on the third candle. Or something else is that there's SMT on the third candle, right? That's key as well, right? So, and there was SMT here as well. There was SMT here, and what's important about this SMT was this was a true SMT, and this was a high probable SMT, right? A true SMT or a high probable SMT is a SMT between 2 sessions, 2 days, 2 weeks, whatever it is, right? So it could be SMT between Asia and London, right? So maybe EU took Asia lows, but maybe GU did not. Right? Let's say this was Asia lows. So let's say EU took it, but GU did not. And let's say this was last week's lows. So maybe GU took it and EU did not. Something like that, right? So those are true SMTs. Those are the only SMTs that I look for. And as you can see, as soon as this propulsion block gets created, right, now I can add. As soon as the propulsion block and the true OB gets created, this is the best place to add, right? I can easily add here and have a stop loss like this on this low, maybe a SMT low, whatever it is, and I can let it play out, right? But y'all can see that on the daily, this is what happened. This is key why this candle, we took the high and the low, right? As soon as we wicked below this low, and when the Wednesday candle opens low, right, I can anticipate that this is going to be a true breakout to the highs, right? Because this is what we did on this candle, on Wednesday candle, right? And obviously I anticipated Wednesday creating the low of the week on my weekly profile as well. That's why this was a good trade. So Monday and Tuesday and Wednesday doing this, and then Thursday and Friday expanding higher.